All right, a change of pace. Time to bring you the business. I'm joined here in the studio by France 24's Yuka Roy. Hello to you, Yuka.
Hi, Rachel.
We're kicking off with the global stock market, capping the worst week since the financial crisis.
Since the 2008 financial crisis. And global stocks have been under pressure all week this week, and that sell-off just keeps accelerating as uncertainty over how long the spread of the coronavirus will continue, keeping investors on edge. All sectors on Wall Street are diving deeper into correction territory, with the Dow Jones dropping 1,000 points for the third time this week. Major bourses in Europe closed the week deeply in the red. Germany's DAX dropped as much as 5% at one point this Friday. As you can see, all down more than 3% at the close. As fear and chaos gripped the stock markets, Larry Kudlow, the White House economic advisor, called on investors and the American public not to overreact. This, as an increasing number of analysts say the Federal Reserve may have to step in and cut interest rates.
I acknowledge the situation could deteriorate, and I acknowledge the risks. But given what we know factually, it looks to me like the market has gone too far. I've seen this before, and it can come back very rapidly. But I'm not saying the market's wrong. It is what it is. But I just think everybody, whether you're an investor or whether you're, ordinary Main Street person, people should not overreact.
Over in commodity markets, crude oil prices slumped on concern over prolonged supply disruptions and weaker demand, dropping as much as 6.5% earlier this Friday. The US benchmark Brent is seeing the biggest weekly drop in more than 4 years. Several key OPEC members are now mulling deeper output cuts in the face of falling prices. Organisers of the Geneva Motor Show, scheduled for next week, has cancelled the event. It would have been the first major European car show of the year and a prestigious one that dates back to 1905. The trade fair is just the latest to join a growing list of event cancellations as governments around the world scramble to contain the spread of the novel coronavirus. Claire Rush reports.
Stands dismantled and packed away before the event even started. The Geneva International Motor Show was set to celebrate its 90th edition, but Switzerland's ban on public events with over 1,000 people, a measure to halt the spread of the coronavirus, has effectively canceled the show.
We're going to have financial problems. We're going to face big losses. We know this. We've mentioned this. We don't have details yet, but we're going to meet soon to find out how to replenish the foundation and allow it to continue its work.
Organizers say losses will be in the millions. Hundreds of thousands of visitors were expected, and some 900 cars were to be on display. The Geneva International Motor Show is just the latest large-scale event to fall victim to the coronavirus. It comes on the heels of the cancellation of the world's largest mobile technology fair, the Mobile World Congress in Barcelona. But not all mass gatherings have been called off. The Salon de l'Agriculture in Paris, for example, is still on. But some renowned events have been cut short, such as carnival celebrations in Nice and Venice. Major attractions are also being temporarily shuttered. Japan says it will close Tokyo Disneyland starting Saturday, just as the park was gearing up for an influx of spring break visitors.
I have to accept the situation. Coronavirus will spread quickly, especially in a large place like this, so it's a wise decision.
All of Disney's theme parks in Asia are now temporarily closed.
Now, France's economy minister, Bruno Le Maire, has announced that businesses dealing with the public sector won't be responsible for any delays caused by coronavirus-linked disruptions. He also suggested the government would consider financial help, such as tax breaks and expanded unemployment benefits for struggling companies and workers. The minister also, though, urged the public not to exaggerate on the potential economic impact of the outbreak.
I urge everyone not to put forward any wild figures on the impact of the coronavirus on growth in France and the Eurozone. I've consulted the Institute for Statistical Studies, the various statisticians, and they do not currently have the necessary feedback. So all the figures that are put forward are simply not true. I think that in this matter, we must keep a cool head and a sense of responsibility to avoid economic panic and unnecessary panic on the markets.
Meanwhile, in Japan, the government has called on consumers not to stop panic buying toilet paper and ignore false rumors. People have been seeing empty shelves in supermarkets as many rush to stock up on toilet paper on rumors that ramped up production of face masks as well as supply disruptions from China will cause a big shortage of that vital household product. Manufacturers are trying to reassure people that there's ample stock in the country. Some have already found money-making opportunities there. This angry Twitter user is condemning a number of ads he found on online trading platforms by individuals buying up toilet paper and then putting them up for sale at exorbitant prices. So some people still see opportunities, but it's not a particularly good one, is it?
No, not at all, Yuka. Thank you for the roundup of the business for us there.